And everybody, it's Tim Reazor with Revere Asset Management. Just 4:30 here on a Wednesday night. It's very quickly, stock owners, market lovers. Before we begin, I've got some really exciting average true range research, never been seen before. I'm going to teach it to you tonight. Some new strategy that I think will enhance what you might already be doing. Well, before we do that, listen, I get a lot of questions on people who want to back test our strategies and want to see how we would have done in different market conditions. And the easiest way to do that, stock owners and market lovers, if you're new to our work, is go to reviewasset.com, and I want you to click Daily Market Insight. On Daily Market Insight, there's 191 pages worth right here. Let's get it. 191 pages. There it is. 191 pages worth of research you can do. And what do you mean by that? We've been making videos since 2014. You can go back and see how any time frame, how we would have handled any market condition. We never pull these down, and we sure as hell don't edit them. So you want to see how we did it in the moment during the time, like you want to go back to the pandemic in February leading into March. You can see exactly how we handled that time frame and why we outperformed just clearly just almost everybody and their brother during that time frame. And so you can go back and look to the taper tantrum. You can go back to any point in time in the last over 7 years and see how we would have done it. If there's something you're looking for, send it to me. Like, ask me, hey Tim, I'm looking for a video on how you handled this. I know where to go in the archives to find this stuff. And so if you're struggling to find it on your own, all you have to do is email me right here at timreasset.com. I'm more than happy to find it for you. I've got classes intermixed inside of that Daily Market Insight tab. You're like, Tim, I heard you talk some classes. Yeah, I could do that. Don has a tremendous amount of work in there, and he's got classes in there. You can go to our YouTube page. You can find our work there, the Revere Asset YouTube channel. All Don's classes, all his lunch and learns, everything Don's done is there. If you have any questions for the portfolio management team, these are the fellas that do all the work inside of the portfolios. If you want to know the buys, the sells, what they're thinking, if you have just a general stock question about what they would do in this market environment, they are so accessible. What makes us different here at Revere is that when you call us or you email us, you're talking to strategists. You're talking to people that are absolutely inside of the markets. When you call somebody at pick XYZ, broker.com, pick moneyassetfirm.com, it doesn't matter, stripmalladvisor.com, you're going to get plausible deniability because they're not actually in the market working for you. They're just passing the buck to a mutual fund manager who's a gazillion miles away and detached from you for sure. And that's all they're doing. So if you're not performing well, they're just going to pass the buck. And look, the old saying, the buck stops with us. It literally does, because you're talking to the people that right here, like in the portfolios, that make those decisions. And that is a benefit for you. And don't ever hesitate to call. If you're not a client, you're not going to get some vicious sales cycle. That's not what we do. We never spam people. We don't. If you want to reach out to us, do it. If not, watch the videos and enjoy the content. We're glad to have you on board the train. America's fiduciary right here sets the tone with that. He is, very pro privacy and very pro empowering of individual investors. And so Danny owns the firm and he drives the train with that. And so your privacy and assuredness that you're not going to get spammed or sales hazed like you do with all these other strip mall firms. Life insurance and annuity firms are the worst at this. You're not going to get that here. So please reach out to us. Now, listen, I prefer Twitter. You can email me, tim@revereasset.com. I prefer Twitter at TJ Reazor is how you get a hold of me. It's brevity. So you direct message me. My messages are open. You're more than welcome to get a hold of me. You don't have to follow me. You can even remain anonymous, but you send me a question, I will get back to you much more quicker than email. Email inbox typically fills up, and it takes me a little bit longer to, in fact, get back to you. So with that, stock and market levers, these videos are for what? They are for your edification purposes only. They're never, ever to be misconstrued as advice. If you want advice, need advice, seek advice. You are to call 855-732-5932 to discuss your individual situation, but certainly not on Twitter. And email, no. If you want individualized advice, just please do it the old school way. Pick up the phone. If you have a question that might be a little bit more in depth, pick up the phone. It saves a ton of back and forth over email. So never be afraid to reach out to us. So look, I talked about new research. Let's move into that right now. So it's predicated on stuff that you and I have already been talking about. And it has to do with the mean. So look, the mean is based on what? The 21 exponential moving average And the genesis of this is that everything reverts back to the mean. You can go back in any chart in the history of time and look how everything will revert back to the 21. Sometimes it undercuts, but it comes back to the 21. So you're looking at a period here of 1, 2, and 3 average true ranges above the mean. 3 ATRs above the mean, 2 ATRs above the mean, 1 ATR above the mean. There is the mean or baseline. And well, ATR on what? Well, over the last 21 days, this is as XPX, excuse me, the S&P 500. The S&P has been traversing about, a little over 30 points throughout the day. But I want to show you something that you might not have picked up on. And by the way, my work is the work that I do. My work is predicated that you're going to miss trades. Okay. You can't be in everything, can't touch all the water. When you go swimming, you go surfing, did you say it was a bad session because you didn't touch all the water, or did you catch like one wave? When you went in golf, was it a bad round if you only hit like 3 great golf shots, not a gazillion golf shots? Well, maybe for some of you, but look, golf is one of those sports where you hit like 1 or 2 golf shots, it keeps you coming back for more. And you typically had a good time walking around and hanging out and doing your thing. Same thing with trading here. So you can't touch all the water. That's important that you understand that. You're going to miss some things. But what if you're being kept out of things because of, like, and I talk about the put call ratio all the time, how it's low and it's signaling that when the pullback occurs, it's going to probably be pretty severe. Yeah, well, that clearly S&Ps you can see the S&Ps are at highs here. Well, how can you get out of being negative, right? And some of you have missed this, and so for this, I show you this work I've never shown anybody before because I like to just test things. And so let me show you this as I take a quick sip there. By the way, 1, 2, and 3 average true ranges to the downside here. So, and just to finish this up, when you get to 2 ATR, especially on the indices, you're setting yourself up for a reversion to the mean. When you get to the 3rd ATR, it's like, look, it's coming. Like don't be alarmed. You sure as hell don't want to establish positions up here at 3 ATR. And you're going to look at this and going, well, I could have established a position here. And okay, what was your sell rule? Like if you established a position, extended above the mean, what's your sell rule to get you out of that situation? Are you trailing up a stop? It's not meant to be nefarious when I say it like that, but what gets you out, right? And so for my work here, I'm going to give you some rules. I'm going to write them down here. I should have typed them out, but I'm going to write them out here. Would have saved me a hell of a lot of time if I would have typed them out. Number 1. So we'll just put number 1 here. And these are in kind of a particular order, but you'll see there's going to be a repeat of a few things. ATR. So we're going to base this on ATR and the volatility expanding. And you're like, Tim, how can you tell ATR and volatility are expanding? There's no volatility in the chart. I'm going to show you how in a second. Okay, so there's ATR and volatility. Number two. Look, we're always going to we're going to look for the ATR setting up, and we're going to look for kind of a gentle slope to the downside because we're going to look to the buy side here. Okay. Number 3, we are always going to respect our ATR rules. Okay. So when we're looking here, like the ATR rules that I just talked about, meaning, hey, what do we want to do? We want to buy generally in the zone of the mean. We don't want to buy extended. I believe, 1 ATR, you're kind of pushing it for me. Okay. I like to be within the band here, near the mean. Okay. If I want to buy. So I want to buy as close to the mean as I can, which means what? You're going to miss things. So we'll just call that ATR and mean, even though it's just buying at the mean. Number 4, respecting the rules. So I could have written that out a little bit better. Let's see. Number 4 is don't touch. So we'll just put DT. Don't touch. And look, you can pause this video, rewind it, go back, annotate your own notes. Okay. If you need me to type these out, email me. More than happy to do the work for you. Don't touch on the buy side unless you're crossing above the 21. That's crucial, okay, with this work. Let's see here, number 5. This is number 5. I haven't been numbering these, I apologize. So rate of change, and I'm going to introduce that a little bit later, but there is a component of rate of change here, but it's not as important as understanding the ATR rules. And Number 6, you're making your decisions. Again, this is a kind of a repeat at the mean, just to reinforce. So the mean, right? And so, well, Tim, what are you talking about here? Just one more time. This is the mean. That's 1 ATR to the upside, that's 2, that's 3, that's -1, that's -2, and that's -3 to the downside. So with that, let's look at SPX and how could you buy SPX? I've been talking for years about, one or two, two closes above the 21 starts a general shift in trend. Well, can you kind of get a better sense of when the shift in trend is about to occur? And can you use ATR to your advantage here? And you absolutely positively can. Now, look, I always tell you there's nothing in absolute. Okay, so if you want absolutes, you're in the wrong game here. Okay, we're playing hand grenades, not horseshoes, and so not everything fits into a square box. And some of you are square boxers. Let's just be honest with ourselves. Some of you out there are square boxers, and you are looking for this perfect thing that's, quite frankly, probably never going to appear. And if it appears once, it's all it does. And so we're in the zone here, right? ZONE is a key phrase here. So let's take a look at this. So here is your average true range. And I want to show you something. Yeah, as the average true range is coming down, what do you think is happening with the volatility here of this instrument, of this index? And it could be of this stock, of this commodity. So don't get caught up in phraseology on terminology here, but what do you think the volatility of this particular entity is doing? Yeah, well, the ATR is coming down lower, and so your volatility is coming off. And I want you to notice what happens to price, okay? And then look, once you start getting to a bottoming point, you don't quite get to the ATR, but you're dancing here around this mean, right? You get to a bottoming point, but look what happens when you start ascending, okay? You start ascending and it starts recovering. Now, this is kind of noisy to me, but this area right here, but look at what happens here. You cross the 21 right here, or you cross the mean. Now, you don't get quite to the 2 ATR, but look, you peak here. So now volatility is rising, and you're going to notice that as volatility comes off, okay, and you can hold the mean and go up. Look at this volatility coming down. Look at the average true range shrinking. Let me say that again. So as the average true range gets lower, right? So let me take my marker off here. Look, the average true range at this point, if you look in the purple numbers on the left-hand side, it's $56.53. Do you see that? And look at the ATR, keep going lower. There's a general slant to this chart, $50. It's getting lower, it's getting lower. At the same time, price is getting higher. And so I want you to understand that relationship. So as the volatility or the average true range is coming off of its peak or getting a general slant to the downside, price is going higher. So now I said, this is again the daily chart. We're back in April, and we're coming up on this third ATR. So what do? Trail up a stop. But look at this, even this little blip up in the average true range or the blip up in quote unquote volatility, you get a little bit of a pullback, right? So where would your next buy set up? So you're working a trailing up stop situation at this point. But look at what happens. You pull back to the mean, okay? And you're kind of bottoming out here, right? And so you could take that if you wanted to, but it's when you get, look at this, you peak, you retake the 21, volatility is coming lower. And you're like, Tim, you're looking at in hindsight. You can go back, by the way, see this little on demand here? You can go back and play this out in real time if you want to, okay? And you can set the dates, you can change how they move. It's a real powerful tool. And you can see how you would have done, but you need rules. Rules get you in, rules get you out. And so look here, volatility had come up to this little peak, gets a little shift down. That shift down coincides with a retaking of the 21. And now you find yourself at the third ATR. Do I personally, by the way, not advice, nothing on this video is advice. Do I want to start a position at the 30 ATR no matter what it is? No, not really. Is there some exceptions to the rule? There always is. That's why I say there's nothing in absolutes, but I don't. I just know that, look, it kind of gets a peak, you get a little shift down in the ATR, and look at what happens to that price. It moves higher. So now what's going to happen here? Is volatility going to spike up, or is it going to come down lower and then we just trade sideways? I don't know, but I do know that if I have this shift in trend of the ATR and I'm retaking the 21 or bouncing off the 21, that's probably a trade I want to take. Let's look at the NDX. Again, pause the video, do your research, follow through the video with me. I got a few more examples here. We're going to look at all the indices. We're going to look at some stocks, and then I will send you on your merry way. So here's the ATR. This is 2.8. So growth stocks peaked, right? Well, they peaked for a bit in mid-February. Look at the average true range coming down. The quote unquote volatility of the price is shrinking, and you had upward price movement. Okay, you hit this kind of trough here, and you start coming down lower. That's fine, no big deal. Everything around, on our work is centered around the 21. So there's the mean. Okay, let's say you were in either trailing up your stop, or you're like, hey, we're closing below the 21, wrapping up things. Okay, look at what happens. You get this movement higher. Okay, we're below the 21, so we're not doing anything with this. We can't retake the 21. We're not touching this with a 10-foot pole. But, oh, we start to dance around the 21 and retake it, and look at what happens just for a little bit. Yeah, probably, the ATR is shrinking. And what is that? What is price allowed to do? Accelerate a little bit, but it gives it up. Okay, but look, you finally catch your footing. There's a daily chart. You finally catch your footing. You're dancing around this -1 ATR and the mean. But as this trend continues and volatility of price in the ATR is coming off, look at what happens. You get this gap. That's something you probably want to take. Can I guarantee it's going to work? Of course not. There's no guarantees. Okay, but you're coming down. But look, you get to the third ATR. What do you know to do with the second and third ATRs? Be on the lookout for any kind of move lower. And look, yeah, you kind of get it, right? Finally, you give up the ghost in what? In May, right? Give up the ghost. And so, well, when would you take another trade? So you got the price expanding on the ATR, which we know if you do enough of this work, you'll see that it's typically in and around the 21, bouncing below the 21. The volatility is increasing, but when it starts to come off, look, we have no other charts up, right? I'm trying to simplify this as much as I can for so many people that follow my work. No other charts up. We retake the 21, price is trending lower, and look at this. It's a really nice looking trend. And then you had the middle of the month last month that gave you some hiccups, but you're still in the trend and the overall price. And you're like, Tim, again, it's hindsight. But look, you can see that this is pointed down lower. You can see that there might be an inflection point, and you can compare it with the 21. If you're below the 21 or you're not breaking above it, you know what to do. You can just avoid it, right? If you're not, there's no like, well, if you're not sure, don't take the trade. Well, look, you're never going to be sure. So what do? You position size appropriately. No one trade can ruin you. You're using rule-based things to get you in and get you out, rule-based metrics. And remember, it's not going to look perfect, but if you can figure out that it's getting quieter, and we were getting quieter and we retake the 21, that's actually really a positive thing for price in these two instances. Well, let's take a look at the Dow. So here's DJI. So let's see here. You can see on 2.2, price of the ATR here, the average is kind of peaking, but look at what price does. It continues to march higher as the average true range gets smaller. That's what you want to take away from this. When the average true range starts to expand, what's happening? Yeah, you're getting these little pullbacks. And someone asked me once, why do you share your work like this? Why do you just give it away? Do you know how much I've shared with folks that give it back to me so much better than I've ever given it to them? I call it the IPO club. There's an IPO club out there, a group of traders that meet online. And I started doing this research. I shared my research with them that really came about from a conversation with Hunter and Hunter Mazingo from Revere Asset. A short 10-minute conversation, figured out something in my head that I thought was super interesting, put it out into the universe, and it's come back so much better than I could have ever dreamed of. And so look, you got this expansion now. So look, you're like, okay, this is coming down, okay? It's setting up, retakes the 21, but you're watching like, okay, price is expanding, but we're still going higher. We're above the 21. We're okay. What do we know about the 2 and 3 ATR? That's somewhere we want to be cognizant that pullbacks can happen at any point in time. You're like, well, Tim, this is coming down and price is coming down. But look what we did. We held the 21. Price keeps coming lower on this ATR chart, meaning ATR is getting smaller. And look at what price does. Yeah. And so I think this work can help keep you on trends. This work can help anyone get over themselves. I know I've been looking at this work, and when I stumble upon something, I just keep digging and digging and digging. And I'm telling you, like, look here. You can go back throughout this chart. I won't bore you with it, but look. So what happens with this? Our price kind of bottoms out, right? We broke the 21. You're like, well, Tim, price ATR is shrinking here, but what do we do with the 21? So hey, for now that moves over, right? Because below the 21, just let the story play out. There's no hero cards given out here, but look at this. You retake the 21, okay? You retake the 21. Price starts expanding, but as you retake the 21, what happens? Now you've got this trend, and price moves a little bit higher. Not as strong as the Nasdaq, not as strong as the S&Ps. The Dow's been weak, and what has been weak too? The Russell. So we'll do it from over here. So Russell. Oh, here we go. You can see a little bit of trend there to start. There's Feb 2, third ATR. What happens at third ATR? Of course, you know, pullback by now. So look at what's happening here. Let's see. You've got expansion. You retake the 21. Just bring it in the real times and look at what the trend did on the contraction of the ATR and look at the relationship with price. It's been the Dow, excuse me, and the Russell have been two of the weaker indices. And you know, you start to bottom out here and look at what's happened. You rebroke the 21. So who's telling you to hold it through the 21? Ain't this guy. But you can use this work as triggers. And whether you're trading options, whether you're trading equities, selling call credit spreads, selling put credit spreads, there's a ton you can do with this work. I think this work works better. I think this work works better to the upside. I think trying to use expanding ATR to trigger when you should potentially short or sell call credit spreads is a mistake at the moment. But the put call ratio is like that too. Put call ratio works so much better when timing moves lower than, or excuse me, timing buys and then timing moves lower. Excuse me, I said that incorrectly. So let's do a couple stocks here. So those are the indices. Not convinced. Not here to convince you, just here to show you my work. How about AMD? Hey, some are going to accuse me of cherry picking here. Look, I try to pick some real popular stocks. That's all. There's no cherry picking. We're going to look at AMD, Facebook, Amazon, Tesla, Ford, and Coin, right? Coinbase. And so here we go. AMD. What's happening here? AMD is its average true range is coming off, and what is happening in the price? As this kind of bottoms out, look at what you get here. You get this pullback process, but oh, Tim, that's not even the second ATR, the third ATR. What was happening to growth at that point? What's happening to the overall market? Keep that in mind. But you get this price expansion, right? You get this price expansion, and you start to come off in March, in the beginning of March, and you barely retake the 21. I don't know if that's something you want to, is that, would that be your rule? But, and you're like, you keep getting this price contraction and you're not making any progress here. So you're like, well, Tim, this work doesn't work at all for me. And I say that you got to use the 21 as your barometer. Look, you're still coming off in this expansion, but you retook the 21, and that's 81 to 85. Might not be enough for you, right? Then you have earnings coming up, and it kind of throws off the gambit. But look here, come down. Here's the mean right there. Trade sideways, which is really nice flat kind of base. Well, it's not long enough for flat base if you're doing a weekly chart, but look at that. It keep the average true range. The price keeps contracting. And look at what happens with price. But also, what was the NASDAQ doing at the same time? Keep that in mind. So a lot of this work is tailored. A lot of this work will be tailored to what the indices are doing. That's why I led with the indices. What about Facebook? Facebook has been in the news. Just a ton of things happening with Facebook. So look at this. You're like, well, Tim, that's earnings. Earnings throws anything off. So keep that in mind. Clearly, there's a trend here lower with the ATR. It's contracting. So now I'm looking, I certainly want to establish a position at the third ATR, the second ATR. I'm looking for the mean. Break the mean. We break the mean, but we break the mean on what? Expanding volatility of price. I want to see us breaking the mean to the upside, and I want to see a general overall trend to the downside. You kind of get that here. And then, well, what about in June? Yeah, price of the ATR keeps coming lower, keeps shrinking, and you pull back to the 21, and look here, you pull back to 21, shrinking of the average true range, and you move higher. Okay. Let's see. Let's do another one. Oh, but overall, but think about what the Nasdaq's been doing too. Anchor to the indice, anchor to the indice. Can you do it with Amazon? Sure, man. Amazon's popular, right? So here you get the second ATR. Yeah, you just naturally start to pull back. Well, here comes this expanding phase of the ATR. You break the 21, right? Okay, have we peaked here? I don't know. I don't know where the ATR chart's going to stop, but I know I'm not interested in anything, regardless of what it is, unless it starts trending higher above the 21. And look, you're really struggling here, but you're going to get a heads up that there might be a move coming as this chart is trying to shrink its ATR. You know, it's right here, the average true range is 94. Here, it's 87. At this point in time, it keeps trying, look at this, look at this, look at this. And finally, when you kind of gap up to the upside, the average true range here is what? 65. Okay, that's something I can work with. And so these are moments in time. Some of you feel the need to be trading all the time. I don't. I don't at all. And so moments in time that you're looking for. Can you screen for this? It's a little hard to screen for this. This is all chart work, friends. I'm quite sure now that I said that someone will send me how they are screening for this and they've combined it, and then they'll create an indicator because you can do anything on Thinkorswim via ThinkScript. And so here's the third ATR. Do you want to establish at the second and third ATR? No, no, that's not a high probability moment in time. ATR shrinking of the average true range, right? The ATR shrinking and climbing above the mean is a high probability moment in time for this. This is not a high probability moment in time for this. This is a high probability moment in time for that, right? It's probabilities. You're extended above the mean, and everything in the history of time will revert to the mean. This is close enough for government work to the mean, right? You kind of get to the mean right there. Hit the mean. Look at that. Hit the mean. This is coming lower. And now you've had this tremendous move higher. And like, well, Tim, that's because the Jedi contract got done. Look, you don't even have to know the news. Okay. So now you've got this peak here. Okay. Got this peak here. And you're above the 30 ATR. What do you think happens next? Yeah, it could go higher. It's a market and anything can happen. But what do I think will happen? Yeah, probabilities take hold. Doesn't mean it's going to sell off. It could. Just means that I'm looking for high probability in moments in time to catch upward price movement. And so I'm looking for a decrease in ATR and a stock that's retaking or accelerating through the mean, not extended. Let's do Tesla, Ford, and Coin. So Tesla. So look, this is a daily chart of Tesla here. Going, look at this Tesla just breaking, right? You're not even here. Here's the mean, right? Here is 1, 2, and somewhere all the way up here is number 3. Here's the mean. Here's 1, 2, and 3. Hey, we got this mean that's kind of just flatlining here. You know, price is above the one, is right at the +1 ATR. Well, I want to buy close to the mean, so it's a no-go for Timmy. And look, now you break the mean, but we're trying to get some price expansion here of the average true range. Is there a point in time we get above the mean? No, we just, look at this, you can't get it. So you're avoiding, right? You're not getting caught up in this time suck of buying something, hoping, wishing, and hoping and praying that you didn't buy the third ATR again. Do. But look, declining ATR now. Again, right here's earnings. But what do? Yeah, you accelerate through the ATR, hold the 21, and you get a +2 ATR. Happens real quick. Maybe that's not for you. Maybe you're like, you know what, man, that's just such quick movement. That's really hard to discern. Can you give me something else here? Yeah, sure, Ford. Let's look at Ford. So Ford, okay, you got earnings there, so we'll just get rid of earnings. Holding, here is the mean, 1, 2, and 3. And what do you get? Decreasing, right? It's after earnings, decreasing, tested, come down, test the 21. Perfect. Perfect, okay. So, and then what do you know? You start getting that +2, +3 ATR, hold, right? You know, just trim maybe, or trail. You know, you don't need to add, don't need to be super aggro or aggressive, and then look for your moments in time. Okay, so nothing to really discern here, but you get some of this pullback action, kind of trending around the 21 here. Retake it, small movements, really nothing good here. Breaks the 21, even though this is decreasing, so we know to avoid that. Earnings are coming up, so good luck with that. You know, that's always a crapshoot as people try to game the game, or somebody always knows. But what do you notice here? Get spike up in volatility of ATR after earnings. Here's the mean. I can see we're starting to decrease, so it's calming down. We retake the 21 here, and then we start making this really nice move. So what gives here? Now, we've got third ATR. We know at third ATR, everything typically reverts back to the mean. So we're going to be waiting to see what happens in and around this area. Okay. Well, this is calming down. It keeps coming down lower after expanding pretty rapidly. And so now we had a today below the mean. So what are we looking for here? Let's see what happens. Can we come back up and retake the mean? Or is it going to be one of those Tesla situations where it can't get above the 21, can't get above 21, can't get above 21? Interesting to see what happens there, right? But you're looking for your moment in time. And so that leads me to Coin or Coinbase, which had a really big day today. Okay, this is a daily chart. It's above the mean, above the +1 ATR. And I don't know if that should scare you or not. I think you're seeing some price volatility expand here. So you retook the 21. Okay, that's great. 2 ATR, you pulled back to this mean area and you've held. This is really tough on a daily chart because this only came public back in April. So let's look at a 4-hour chart, something that you can set up on your Thinkorswim. You can do 195-minute, but 4 hours like standard time. A little hard to discern here, but look, you're just flatlined here, okay? See if I can make this a little bit bigger. It's a little harder. If you expand the box, you can see a little bit more action. But on this 4-hour chart, what do you notice here? Yeah, you're just you're not really expanding here, but you know at the third ATR, same, even though it's a 4-hour chart, okay, I'm at +1 ATR, I'm at +2, I'm at +3. I'm looking for the pullback to the mean. What's the average true range doing here? It's kind of flat, so that's all right. You retake it, and before you know it, Bob's your uncle, you're up 7%. So what do you think happens here? Yeah, I would expect that you probably climb up here to this +3 ATR, unless the entire market collapses, which I don't think is going to happen. And then you want to see if it pulls this kind of move again. But these will all be a little bit higher. But you can use, my point here being is, you can use this same work on smaller time frame charts if it's not giving you enough information. And I say that because there's been a group of IPOs that have just been working. And so you can do this with any stock, but let's see if, and by the way, this is the first time in a long time. Look at this, that you've gotten to the third ATR on even a 4-hour chart. And so this is really constructive here for Coinbase. So I just wanted to put Coin on your radar to maybe potentially just study, watch, and see how it shapes up on a 4-hour, on a daily. Like, you can take this down to an hourly, right? Same principles apply, like trail it up if you want, but it pulls back, right? You can do the same work. But remember, if you take a trade on an hourly chart, you got to kind of execute on an hourly chart. And those, I prefer to go out a little bit longer, say a 4-hour or a daily. So hopefully all this helps. And some of you are like, looking, Tim, that wasn't really, that wasn't like X happens, I do Y. X happens, I do Y. No, this is, you're trying to find the trend of something. That's what's important here. And so go back to this SPX. What I'm trying to show you is that when this is shrinking and you're above the 21, there's a really good chance price is going to move higher. I can't guarantee it because there's no guarantees in the market. Remember, it's a market. You know, when the auctioneer calls out price and nobody raises their hands, what's he going to do? He's going to lower price. So anchor yourself to the indices and then look at the stocks within those indices if you want to trade the individual names. Hopefully that all makes sense. And if you have any questions, look, always here for you at TJ Reazor on Twitter or timofyourasset.com. Hopefully that helps. Hope you have a great night, and I will see you. Let's see, tomorrow's Thursday. Hunter has your video tomorrow night, and that will be a rollicking good time. Let's look at the futures real quick. Futures just opened up. Let's see. Futures are just quiet here at plus 2 points. They open up at 5 o'clock Central. So with that, my friends, I hope you have a great night, great day, and I will see you at the next update.